Ladies and gentlemen, welcome to a new episode of the Fintech Hunting podcast. We have an absolutely awesome guest for you today. He's a technology evangelist. He's an industry thought leader. He's a leading product and pricing expert. Help me welcome back to the show, Mike Vough, Head of Corporate Strategy at Optimal Blue. That's a new title, Mike. Congratulations and welcome.
Thanks for having me, Michael. Excited to be back here to chat with everything that we're doing here at Optimal Blue and what we're seeing across the industry right now.
Well, it is great to have you. Like I said, congratulations on the new title. You're leading up strategy. You know, we're now into 2025. Talk to me about the importance of partnerships and collaboration in the industry.
Yeah, I think that that's something that kind of maybe goes by the wayside sometimes when folks are looking at their tech vendors that they're working with is how plugged in are they to the rest of the ecosystem out there? In the tech space today, I think we all know this. There's a bunch of different vendors for a bunch of different spots in the tech stack for mortgage lenders, and making sure that the ones that you partner with are incorporated into those other parts of the stack is almost just as important as, hey, do they have feature X? Do they have feature Y in today's tech ecosystem?
Well, and you guys do such a fantastic job of partnering and really extending that tech stack. Talk to me about some of the partners you have and why those partners are so important to extending what it is you can offer to lenders.
Yeah, absolutely. And here at Optimal Blue, I like to think about us as like the only true like secondary marketing technology company. There might be PPE companies out there, there might be hedging and trading companies out there, but we're the only one who has both and has that primary to secondary market connectivity. But the mortgage ecosystem expands out of that, right? It expands more to the origination side, more to the servicing side, and you can even talk more downstream in the more of the cap market side, right? What happens after that loan is securitized and sold in the secondary market? Well, it becomes a bond and it becomes part of someone's investment portfolio. We kind of stretch that full life cycle. And so there's really exciting companies that we work with on the origination side. Think of, a number of LOSs, number of, POSs, CRMs that we all integrate to. But I think something that you'll see a little differently from us here in the future is those other parts of the life cycle I mentioned earlier, right? There's things such as you think of different servicing technology providers who maybe want to think about recapture, right? There's so many homes out there that have rate incentive or have an equity, a lot of equity that they've appreciated over the last couple of years. That was never really thought of something in the servicing world, but with retention, that's a big part of it, right? And even when you think of what we're doing out there in more of the capital market space, and we produce a lot of mortgage valuation models, but also our data is such a big part of that as well. We're seeing a lot of folks really interested in the data that we spin off of our business. I think we're going to get to this, but we had a really exciting announcement that came out at the end of 2024 with a partnership that we're working on with the Chicago Mercantile Exchange, or the CME. And so it's just different innovative solutions that we're trying to work with other reputable partners on to kind of help the mortgage industry in general too.
Well, you brought up a number of key points there, and I want to make sure that our listeners really catch that of so many people when they talk about the mortgage life cycle, they do it under their filter. They're really
Exactly.
enclosed viewpoint of I'm an originator, I'm a servicer. Okay, this is what I do. And I love how you're talking about expanding that vantage point so that people understand it's not just origination, it's not just servicing, it's cap markets, and it's going into bonds, and really looking at that life cycle, because that is critical for people to say, okay, when I look at my tech and how am I best serving that whole life cycle, I think it puts things in a different perspective. And then you mentioned a partnership. Talk to me about the CME partnership and what does it really mean for industry participants?
Yeah, and before I do that, you had a couple good points that I want to address too. So there's, when these things are not connected, there's friction points, right? And then every time that you have like a friction point in this manufacturing process or just life cycle, that's usually a spot where there's more cost incorporated,
Right.
right? There needs to be a human there that's moving the file along, or there needs to be somebody who's spending more time pressing a button, or maybe there's something that's just not as effective out there. And that kind of leads into this partnership that we're working on with the CME. One of the things that's always been a struggle for folks is, how can I, from a cost-effective way, manage my interest rate risk and manage it in more of a long term way. And so we partnered with the CME to actually create a new tradable security called a mortgage rate future. And when you think about a mortgage rate future, what it's really meant to do is give folks a view of the primary rate, right? There's the primary rate and the secondary rate. And like the way I think about that is the primary rate is what, hey, if I go on any of our partners, websites and say, hey, I want to price a mortgage for myself, what rate am I getting, right? You're probably getting something like that 6.75 range today. But in the secondary market, there's a different rate, which is, maybe somewhere in that 5.5 range right now. And that's where like the normal tradable bond is. And that's how we hedge those originations that we have. Well, people could hedge that 5.5 because there's a very liquid, robust TBA market out there. But folks really couldn't hedge that difference, right? That 6.75 to that 1.25. And there's a lot of factors that go into that. Things like G fees, things like your servicing fees, things like just the general profitability of mortgage companies. And when those spreads move differently, it's very difficult for asset holders to be like, hey, I could think about prepayment risk, but I can only hedge 5.5 of the 6.75 total mortgage rate out there. Well, our new future gives people access to that first 6.75 or that first primary rate that's out there in the mortgage industry, which we think will be super helpful for maybe folks who are holding on to MSRs, maybe folks that have a portfolio of loans that they've accumulated over time, and maybe even folks who have long dated securities because this are long dated loans. Think builders or maybe folks who are doing like long term float downs or things like that. We think the asset could be super helpful for those people as well.
I absolutely love that. And I think two things that come to mind, what that brings is more certainty and more clarity. And when you have
Exactly.
that, then you can eliminate some of those friction points, like you said, because hey, 2024 was a tough year. And the cost to originate a loan, so many other industries you see that they can manufacture something and they can do it at a lower rate. Cost to originate a loan continued to rise. It's very high, so that impacts profitability. So I'm excited as we're in 2025 looking at how do you improve profitability, and you guys are delivering concrete tools and solutions to allow people to do that. Absolutely love it.
Yeah, absolutely. And I think a couple of things just to build off that. It's yes, there's efficiency plays when you talk about like partnering with people to make it easier, get it to like a click of a button. But then there's like capital markets things that drive cost as well. And this is, I think, a way to show that hey, yes, we're trying to integrate and be a great partner out there to other people in the industry. But we're also working with folks that you may not think of as like traditional Optimal Blue partners. Like the CME probably wasn't someone that folks thought was a traditional Optimal Blue partner, but we're looking for partners out there to help us, drive that cost down. And, we're really excited about that. We think there's like the groundwork there to maybe even do additional, mortgage rate futures out there in the future as well. This one's based upon the conforming 30-year rate that we observe in Optimal Blue. But, your mind can wander on some of those additional use cases that we could potentially turn into tradable securities in the future.
Great insights. And I think the key there is you guys are looking beyond traditional partnerships because you're looking at adding value, cutting costs, creating efficiencies. It's not just, hey, we added another partner, because I think so many times people add a
Exactly.
partner to say, here's another logo I have, not because it's really addressing a problem, it's creating an opportunity in the marketplace. So I love what you guys are doing there. You also have some exciting stuff coming up in February, I understand, in San Diego. Tell me a little bit about that.
Yeah, we're really excited about this. It's honestly Optimal Blue hasn't done something like this since probably before 2019. We're doing our first solo Optimal Blue user summit And we haven't, obviously there's a lot of, transactions that have happened in, the early 2020s, including Optimal Blue. And so this is our kind of our first big standalone conference for all of our users. So whether you're using our PPE, whether you use our compliance tools, our investor tools, our hedging and trading tools, and we're just really excited because we have such a deep product offering that we're going to be highlighting, and some of the new functionality that we're delivering for there as well. Big focus on AI, big focus on, I mentioned just click a button and go. Same thing with retrieving data. You're going to see a lot from us on the AI front in terms of, hey, can you use the power of our large database to get really interesting facts out of it, such as, can you originate this loan for this expected level of profitability? Can you, get daily insights into the profitability or position of your capital markets team? Even things like you talk about click a button and go. We're looking at things such as being able to read documents and quickly, check out trades that are done in the system. And these are all things that we're looking to release at the summit as well. And I can't, this one is near me. Tony Hawk is coming to speak at the conference. Anybody who was, in and around my age cohort definitely played his video games as a kid or a teen. And so I'm really excited to see Tony Hawk up there as well.
Oh, it sounds like a great conference. And I think what I have found over the years is the client and user conferences, in my opinion, there's so much value to those because you get a great mix of some executive leadership that is there. They want to see future direction, they want to see what the tools are. But then you also have power users who are
Exactly.
there talking to other power users, collaborating, sharing ideas. And you walk out of there with, all right, here's a dozen things I could implement. I didn't know that ABC Mortgage implemented this way and they're using the tool this way. And then you guys also get a ton of great ideas about where can we take things, in the next year. So I'd love
Yeah.
that. I believe the dates are what, February 3rd through 5th in San Diego?
Correct, correct. And we have a number of tracks there too to build off your point from earlier. Like we have tracks that are focused on the cap market side, tracks that are focused on origination. We have tracks that are focused more for the executive profitability angle as well. And then we were doing a whole like showcase hall for some of our partners, for us to also showcase our technology as well. And a lot of those new functionalities that I mentioned earlier are going to be showcased there as well. So you can see it kind of live on the ground floor. So we're just super, super excited about it.
Well, and you mentioned AI. That is near and dear to my heart. I love speaking about AI. I think it's truly transforming the industry. And what I really started to see towards the end of 2024 was now the people that were leaning in, whether it's a tech provider, whether it's a lender, whether it's a servicer, the ones that leaned in earlier in 2024 started getting separation. And what I think we're going to see in 2025 and beyond is those companies that are embracing AI and leveraging AI to solve problems and create greater efficiencies. When the market turns, there's going to be even greater separation, and they're, in my opinion, going to gain more market share. What's your opinion?
Oh, I can't agree more. I mean, the thing that I think you saw in 24 with the folks who adopted it is they're already going to be at a spot in 25 where if you think about where this will evolve to, you think about the tasks that you're asking AI to do today, it is almost like that junior level employee, right? Go get me that data. Go take this physical form and get it into a database, right? Those are some of the main things that you saw that do there. But as you start to layer on things like machine learning models, as you start to get more and more experience, you're going to see that like junior level, maybe college, right at college hire, and AI supplementing that. It's going to continue to kind of go up this like sophistication ladder. And I think the folks who are already at that level, in 1, 2 years could be at an even higher level, by just getting more experience and getting the reps underneath their belt.
I agree completely. And the way I like to phrase it is the AI we're using today will be the worst AI we ever use. It's only going to continue to get better. And that is super exciting as a tech provider, as providing, so many resources to the industry. I know For those of you that are part of the whole Optimal Blue ecosystem, go to the summit. You want to make sure you
Yes.
don't miss out. There's going to be so many things. I can't wait to get updates on some of the cool things that you guys are doing and talking about. Mike, what else is in store for 2025?
I think what you're going to see, I'll say like generally in the industry is, I think we're going to see prolonged periods of higher rates. I don't think that there's like some panacea out there of, some, back in the fours. So I think you're going to see more, honestly, more of what you saw in 24. I think you're going to see people continue to push AI to get more and more efficiencies. I think you're going to see more and more integrations out there in the industry as well. You're going to see people trying to be as connected as possible, try and get rid of those friction points that I mentioned earlier. I think potentially what you might see is some differences out there on the cap market side. We talked about our mortgage rate future partnership with the CME earlier. I think you might see some different things from the investor community in terms of how they're pricing. Moves more towards maybe more API based pricing as opposed to just rate sheet based. And I think in general it's going to be hey, how can we from a mortgage community, how can we continue to get more and more efficient, right? You talked about the AI adopters earlier. How can we get to a point where when there is that turn, because there will be that turn eventually, maybe not in 25 but 26 potentially, maybe a little bit further out. How can I keep my staff at a constant level but expand and contract what they're doing from like an origination standpoint, right? I think gone are the days, hopefully, of hey, we're rates are down and volume is tripling. Well, now I have to go double my staff. I think those days, that like accordion model of staffing is hopefully behind us or near behind us. So I think you're going to see more just continued folks trying to drive that the efficiencies up there.
Excellent insights. Mike, if somebody wants to find out more about these partnerships, if they want to sign up for the summit, what's the best way that they can go about doing that?
The best way is to just follow Optimal Blue on LinkedIn. We're producing a ton of content. This is a great podcast, and we've got great podcasts there too. And we also just push out a bunch of information. You should expect to see some more stuff from us on the mortgage rate future, as well as other things that we're working on today, also on the Optimal Blues LinkedIn site.
Oh, that is fantastic. Mike, you are welcome back anytime. Thank you so much
Appreciate
for
it,
being
Michael.
a guest on this episode of the Fintech Hunting Podcast.
Appreciate it.